Hooty hoo, all my stock market gamblers. Welcome today. I'm Tom Mike. I'm so glad you're here. What do we got going on with the markets? Well, I keep saying the market's going to come in. I'm saying that we topped out in the S&P and the NASDAQ. I'm saying this market will drop below the 50-day moving average. Now, so far, the 50-day moving average has been holding up, right? The market is above the 50-day moving average. Came down below the 20-day, dropped below the 50, but bounced back up. So far, the 50 days holding, but I think that 50 days is going to give way and the market's going to come in, right? It's going to come in. It's going to start going lower. Okay, now why do I think that? I look at the HYG. The HYG is below its 50-day, and I think it's giving way, and I think that's going to bring the markets down. Now, why do I look at the HYG? First of all, what is the HYG? The HYG is the junk bond index, right? Junk bond index. What are junk bonds? These are bonds owned by zombie companies. Now, what's a zombie company? A zombie company is a company that doesn't bring in enough cash flow to even pay the interest on its debt, right? I mean, kind of like our government, right? Doesn't bring in enough cash flow to pay the interest out, right? So they're zombie government. But we got these zombie companies in the S&P 500, about 20% of them, 20%, 500 companies, so 100 companies are actually zombie companies. Zombie companies do not take in enough cash flow to even pay the interest on the debt they already have. So what do they have to do? They have to borrow money just to stay in business, right? Now that's what's called a junk bond, right? The junk bond is the HYG. Now the HYG is coming in. It's dropping below the 50-day moving average. It leads the market up, leads the market down. Right now I think it's going to lead the market down. Now a lot of people say I have this all wrong. I look at the HYG as a liquidity index, right? If the Fed's not pumping in enough money, that's going to start dropping and the interest rates will start going up to these zombie companies, and these zombie companies will be dropping like flies. They'll be going out of business. They'll be going bankrupt. Bankruptcies are increasing. And if you look at the HYG, when that starts to drop, it's harder for the zombie company to go out and get money, right? Now, I say that the Fed injects liquidity. Now, a guy left a comment, and he's technically right. Okay, so he says that the government stopped buying corporate bonds back in 2022, right? So why do I look still at the junk bonds for liquidity from the government? Now, he says that they stopped buying back in 2022. Now, this is just my take, right? My take is that they're still buying them. Now, they say they're not, but my take is they're still buying them. They're still pumping money in. On their books, now look, they've never been audited, right? So we don't really know what's on the books of the Federal Reserve, but my take is that they're buying them. Now, if they're not buying them, the plunge protection team's buying them. Now, a lot of people say, but Mike, the plunge protection team, that's just a mythical thing. They're not really a plunge protection team. Yes, there really is a plunge protection team. It's a real thing, right? When the stock market starts to crash, they call the plunge protection team, they give them the code word, and they go in and they start buying the market, right? They start buying the market. Now, where do they get the money to buy the market? I'm telling you, it's the Federal Reserve. Once again, just my take, right? I'm saying the plunge protection team has unlimited money. Now, if they wanted to, they could never have a down day again. They just keep buying the market, keep buying the junk bonds, keep buying the HYG, keep buying the ETFs, the SPY, the QQQs, and push everything up higher. The plunge protection team is in full force. You can Google it. It's a real thing. They have a trading desk. They go out and they trade the market, right? And they trade the market with unlimited funds provided to them by the Federal Reserve. So technically, the Federal Reserve is not buying the junk bonds, but the plunge protection team is allowed to buy the junk bonds, right? Okay, another way it works is the Federal Reserve, okay, look at BlackRock, here's some money. We need you to go in and buy the junk bonds. Technically, the Federal Reserve is not buying the junk bonds. It's BlackRock, but we're giving BlackRock the money to do it. We're loaning them the money, right? Maybe at 0% 4% interest rates to force them to go buy the junk bonds. There's a lot of ways to circle around the thing. Now, technically, the Federal Reserve say they stopped buying corporate bonds back in 2022. That part I agree with. They say they stopped buying it. Do I believe that? Not for a second. Not for a second. You see, they have a big problem on their hands right now. These zombie companies, they need to borrow money, but they have no money, right? They have no liquidity. That's why they need to borrow the money. They don't bring in enough cash flow. They have a bad business model. They should be let to fail, right? To just fall by the wayside, to go out of business. But the Federal Reserve, they don't want to do that, right? They want to keep them alive. They want to keep beating the dead mule with the whip. Keep going, keep going. You can make it, you can make it. No, they can't make it. They have a bad business model. Now, what we're seeing is a lot of these businesses are starting to show cracks in the credit issues that they're having, right? They can't get the loans at an amount that they can afford, right? Well, they can't afford anything, but they aren't finding banks that will loan them. So you have now what's called the shadow banking industry. They're not the big banks like Jamie Dimon, right? Jamie Dimon, Chase Bank, right? And you got the Bank of America. You got the four big ones, Wells Fargo. You got the big ones, right? But the little ones, they're making the shadow banks stay in business, right? Now, what would a shadow bank be? It'd be like, okay, in the auto industry, Tricolor, right? Tricolor went out of business. What were they doing? They were borrowing money from the big banks. As a matter of fact, Jamie Dimon's a little bit embarrassed because he loaned them a lot of money, something like $200 million. I don't know. It's a big hit for Jamie Dimon. But he loaned them the money to go make auto loans, subprime auto loans, and it's a miracle they didn't pay their auto loans back, right? During COVID, what were we doing? We're charging double for the cars, and we're giving anybody a loan that needed one. You didn't need a job back then because it was the pandemic, so you could go out and get the loan. Well, guess what? These people didn't make their auto payments, so Tricolor went out of business. JP Morgan, Chase, JP Morgan lost something like $200 million in it, so they take the hit indirectly. Just like the Federal Reserve, they're not buying the corporate bonds directly, but they're buying them through the Pledge Protection Team. They're buying them through BlackRock, through Blackstone, through other companies, right? And there's a big problem right now because these cracks are starting to show up. And that's why I look at the HYG to see if there's liquidity going into the marketplace. Right now, liquidity is starting to dry up, right? Starting to dry up. You can see that by the falling HYG, by the falling junk bonds, right? They're below the 50-day, going to pull the S&P down below the 50-day, going to pull the NASDAQ down below the 50-day, and everything's going to start to crumble, right? These are the cracks. Now, you got the private equity problem. Now, we talked about that a little bit. The private equity, they make loans, right? They make loans, and these loans can be anything, right? Anything that the big banks don't want to loan on, they go to the private equity for the loan. So some of these private equities are loaning to the zombie companies. Some of them loan to the commercial real estate companies when they couldn't get the loan from the big bank. But private equity loans are a big problem right now. Now, here's what's very fascinating. What's very fascinating is that Blackstone is now buying insurance companies, right? They're buying up insurance companies. Why would Blackstone be buying insurance companies? Well, to get access to that big pool of money. There's insurance companies have a big pool of money that they operate from, and they invest it so when you have an insurance claim, they'll have enough money to pay it off, right? But they invest from a big pool of money. So Blackstone wants access to that big pool of money so it can dump its private equity onto the insurance company. Now, private equity pays a little bit higher rate, 10 to 12%, right? If the insurance companies, when they were secure, they were investing in the bond market, right? 4%, maybe 5% if they were lucky. But now they have to go farther out on the risk curve, 10 to 12%. So Blackstone buying the insurance companies to force its private equity junk on them. And this is junk bonds. This is crap. This is stuff that's going to go under. And all of a sudden, these insurance companies aren't going to have enough money to pay out the claims. And they're going to start falling over like dominoes also. You got problems problems in the pension funds, and some of the funds are already blowing up. Now, everything's intertwined. People don't get this. Everything is intertwined in this banking cartel, right? This banking system that we have. It's all intertwined together. When one goes down, there's going to be another. As Jamie Dimon says, when there's one cockroach, there's more than one, and there's going to be more. Some of the cockroaches have started to go under, right? Or they started to fall by the wayside. But okay, so you got these funds that are actually starting to go under. You see, Tricolor in the auto industry placed, well, some of these funds were invested in Tricolor and they've lost hundreds of millions of dollars. So these funds started to blow up, right? They blew up. They were called the O'Connor funds. Now, the O'Connor funds were owned by UBS, UBS being one of the major banks, right? And the UBS, they blew up one of the O'Connor funds. There's actually two of them. Now, these were marketed as AAA to the investors, right? But the investors lost all their money because the funds blew up, right? Okay, UBS did not make the investor whole. They just go, oh, we messed up, right? I mean, it was AAA rated, but you lost all your money because these two funds went out of business. There were actually two funds. When one fund went out of business, the other fund got redemption calls. They had to start selling their assets, which a lot of them were private equity, right? And those aren't liquid, right? So they had to sell them off, 80% losses, right? Sell them for 20 cents on the dollar, and these funds would go out of business. Now, once again, you lost your money. We're real sorry. We blew up the funds, right? And they were smaller funds, right? I'm not sure exact size of them, but a lot of people lost all their money in AAA rated funds. You can't make this stuff up. It was AAA rated. It was solid, but it was still private equity, right? You got to be careful with what you're invested in. Now, the pension funds, they're in private equity now. It's now legal for them to be in private equity. Insurance companies are now legal to go into private equity. And that's why Blackstone buying the insurance company to force their own private equity onto them, right? And saying, hey, what a great investment this insurance company is making. We're giving them 12%. Yeah, 12% until it blows up. It's all good until it blows up, until you can't pay. And then these insurance companies go out of business. Check your pension funds. You'd be surprised what these pension funds invest in. A lot of them are in that crypto crap. You would be shocked. I mean, Bitcoin's having a little trouble right now, right? I mean, was 125, now it's down around 95. What's going on? I don't know. Lost 30% of its money. That's fine. Well, these pension funds, they can't afford to take a 30% loss. They went into the crypto, went into the Bitcoin to make up for all the losses they're taking on the bond market, all the things that they were investing in that's safe. Most of these pension funds are underfunded by anywhere from 50% to 80% underfunded. So if you have a pension, you may not be getting paid on it because some of these funds are going to go under. See, everything's intertwined. The bank balance sheet's intertwined with the pension funds, which is intertwined with the insurance companies, which is intertwined with the hedge funds. And now they want to just put them all together, right? Blackstone wants to buy the insurance companies so they can put their hedge funds in there. And it's just a big mess is what we're going to be dealing with here. It's really shocking that this is going to come crumbling down. You're going to see the banking cartels. We're going to be a lot of takeovers. They're going to be forced takeovers, shotgun weddings, if you will, but they're going to be taken over and they're going to be we're going to get down to probably 4 or 5 big banks because they're going to be easier to manage. And eventually the Federal Reserve will become the bank, right? It will be the central bank digital currency and everything will go through the Federal Reserve and we'll just do away with the cartels, right? It will be the Federal Reserve will be the bank, we'll call it, the stable con, right? I mean, it's stable con's going to be it, and there'll just be one bank. We're going to get down to one bank is what the goal is. I say they're going to wipe out the regional banks. I don't like keeping my money in the regional banks. Even the big regional banks, I got money in them. I mean, but I'm worried, right? I mean, I think they're in trouble. 2 of them merged together. I know one of them was in trouble. That's why they merged together. You got to be very careful where you're keeping your money right now. Well, where's Tall Mike keep his money? You know the answer. I like that real money. I like that gold and silver. I like that when all these banks come tumbling down, I still got my gold. I got my silver. A lot of people put it in safe deposit boxes in the bank. Do not do that. Do not do that. Look, when the safe bank goes down, you're not going to get your stuff out of the safe deposit box, right? You got to keep your stuff. You got to hold on to your stuff. If you don't hold it, you don't own it. But that real money, you can hold on to it. But I got the crypto. I got the Melania coin, the Trump coin, the fart coin, the Doge coin. I got it all, man. I got it all. I got the Bitcoin. I got the Ethereum. And good luck to you. I don't think that stuff's real. That's just my take, right? I mean, I know that you leave the comments. We got proof of work. You got proof of something, right? I got proof you're down 30%, right? When at the same time, real money's up about 40 or 50%. That's kind of sad for you. I'm sorry for you, but you're in the wrong thing. That's just my take. Anyways, if you like this stuff, give me the thumbs up. Punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.